Hi everyone, it's Jimmy Nguyen. I'm founding president of Bitcoin Association, the global industry organization that supports Bitcoin SV, BSV. Welcome to another episode of Blockchain Policy Matters, our web series where I talk with lawmakers and policy leaders across the globe who are influencing law and regulation, directing the future of the blockchain and digital asset industry. Today, I'm pleased to welcome as our guest someone from across the pond from me, one of the blockchain leaders from the European Commission. He is the head of unit for digital innovation and blockchain for the Digital Single Market Directorate, DG Connect. And he's also co-chair of the FinTech Task Force for the European Commission. Please welcome with me, Pēteris Zilgalvis. Hi, Pēteris, how are you?
Just fine, how are you? Nice to see you today.
Nice to talk with you. And we're so happy to speak with you because my prior guests on the series have been from the United States, and you're my first person I'm speaking to about European blockchain policy. So I'm excited for our audience to hear about what's going on in Europe. Before we get to Europe, I wanted to talk about your life in Southern California before you ended up back in Europe. So tell us about going to school at the places I went to, undergrad at UCLA and law school at USC. We did the same schools, but a few years apart.
So I mean, those are great universities, and the privilege of studying there. I was a chancellor scholar at UCLA, so I guess brag a little bit, and finished cum laude in political science, and had the option to go on to a doctorate in political science, which UCLA is renowned in, but decided to do law, and specifically international law and international environmental law. I was already interested in climate change and some of these issues at the end of the 80s. And so when I returned to serve my country, which was re-establishing its independence in 1990, Latvia, and I was chief counsel of the legal department of the Ministry of Environment. One of the first things, or not first, but after a year or several years, was prepare for the Rio Convention of 1992, when the United Nations Framework Convention for Climate Change started, and preparing Latvia's signature, my minister's signature for that. So I mean, I think it's an educational background, at least, that I'm proud of, and that has served me well. And I was a national university cycling champion, or part of a team pursuit team for USC in 1988, and also had the fun of being in the UCSB, UCLA, and USC surf teams, along with the cycling, which is the thing that I did most seriously.
So you went all Southern California out, cycling, surfing, all the outdoor sports.
Oh, well, I mean, cycling in a way is linked to Europe. I mean, I'm living now in the probably the home of cyclocross and the home of spring classics, Belgium. So I mean, the cycling culture here is very strong. But I mean, I was in the elite programs. I'm not sure if they still have the category system, but I was a category 1 cyclist, and raced against and was beaten by people like Lance Armstrong, including for a medal when he had to give back some of his various medals and championships. One medal that he had still gotten as an amateur, he didn't give back. So I didn't move up into an extra national medal because of that. That probably shouldn't have, but I mean, just something interesting to think about.
Well, I'm sure you're carrying all of that athlete discipline into your work today. I'm curious how you moved from an interest in environmental issues and climate change, as well as health, to now the blockchain and digital asset field.
Well, I have to say, I mean, my focus has always been from the very beginning, at least partially or a lot, on technologies. One thing that you find quickly in environmental law, a little bit different from at least international law at that time, is that so many of the solutions or part of the problem are linked to parts of the problems are linked to technology. You both have technology that can remediate through innovation, solve a problem, and you want to ideally use the market, utilize innovation-friendly legislation to encourage that. Or you also have old technologies or new technologies which are found to be damaging in some way that are a part of the problem. So very early, climate change had these factors. We also had biotechnology, the Biodiversity Convention early on. So I started doing more and more with business and environment. I went on to the World Bank, and also technologies, as I say, both in the areas of remediating pollution, for instance, but also new technologies like biotechnological solutions to something like parts of an oil spill, other things. And then from that, you get to link into bioethics from the biotechnologies. Then I was in charge of e-health and digital health for some time, which has very much of a link with apps and the apps economy, especially today. And then discovered Bitcoin and blockchain and fintech along the way. Actually, at another university, most of all, the University of Oxford, when I was a visiting senior fellow for a year, 2013, 2014, working on innovation policy. That's when I deeply got into the fintech and the blockchain.
When did you first learn about Bitcoin and blockchain?
I probably heard about it very early, about maybe 2010, but I say immediately didn't take any deep interest into it until probably the end of 2012, 2013. And then it's a little bit of an anecdotal story, as these things sometimes are. I had this assignment, which I was very pleased to have, from the European Commission to do a year of academic study and policy work on innovation policy at the University of Oxford, St. Anthony's College. And I got there with a fairly broad research agenda that was innovation policy and how the state can make frameworks, regulatory frameworks, investment frameworks, work with the private sector, leave certain areas to the private sector to have innovation prosper in an economy. For us, a wider economy, the single market, or within a country. This was mid-2013, very early, correctly or not. One of the wise people I talked to the University of Oxford said, do not do anything on e-health here. The NHS is an anti-innovation zone. This is 2013. So sometime back, whether true or not, this was what some person who lived and worked and addressed these areas told me. So I said, okay, well, maybe that's not it. And then relatively accidentally, I bumped into a gentleman, a very nice gentleman from the Financial Conduct Authority in London at that time. And it turned out in our discussion was at the beginning of Project Innovate, which later became Regulatory Sandbox and all kinds of interesting things, and pulled me in and gave me access as an academic to some of the early discussions. This is before the Regulatory Sandbox had even gone live. So I got a view in on that, and then very quickly through other avenues met all kinds of fintech people. This was really the beginning of the fintech boom in East London and Shoreditch. It's starting to come into the city. And so I had an exciting time then with my usual contacts in places like Estonia, Latvia, Stockholm, other cities, Paris, that had fintech also starting to rise. And then that's when I started deeply looking at both Bitcoin and blockchain. I was in the virtual currencies working group, a very strongly populated, mostly with students, younger people group that they had at the University of Oxford. And and then I started looking fairly early because my focus was never on financial markets, the markets aspect as such, but more what you can use a market to do in the environment or in other parts of the economy to finance things that you want to do, a government wants to support, or a society might want to support. And so I started more having an emphasis on the other applications of blockchain, supply chain, for provenance, also quantifying climate change, something we continue to look at now, bonds on blockchain to move back into the financial sector, and so on.
Fantastic. That's been a great summary of your history getting here. Now, I wanted to talk about your role with the European Commission. You have this very long title. So would you explain for our audience what it is you do and how it relates to the European Commission's goals for a common market?
Very, very gladly. I'm in the part of the Commission that used to be called, or very recently called, the digital single market. So the digital part of the single market, which should be a seamless market across the 27 countries. Not always is. For some things it is. You can passport in crowdfunding, hopefully with what we'll be talking about a little bit later in markets and crypto assets. You'll be able to passport in crypto assets once it comes into force. In payments, you can passport. There's things that can be done in banking and insurance. So this is this digital side of the single market. That's where I am. I'm in charge of digital innovation and blockchain. It's a whole set of things. It includes Startup Europe, which is a program that has now a Startup Nation standard of excellence, trying to pull down barriers to startups to being able to scale across the whole EU, things like stock options, access to finance, regulatory sandboxes. Then I have also innovation procurement policy, innovation radar, which looks at the most innovative examples of EU finance projects. Digital standardization is something I coordinate, a standards policy, an action plan that we're working on right now, which will come out soon as a Commission communication. And then if we talk about blockchain, my unit runs the EU Blockchain Observatory and Forum. Everybody is welcome to participate in the workshops and read the reports and watch the videos. Website open to everybody. Then we have a European blockchain partnership of 29 countries, all 27 EU member states, Norway and Liechtenstein, who are implementing now, deploying a European blockchain services infrastructure across borders in these 29 countries, 4 use cases: self-sovereign identity, diplomas, audit documents, and RegTech regulatory reporting for things like value-added tax, for example. New use cases coming on include small and medium enterprise bonds. It's also a regulatory sandbox. It's been a regulatory sandbox to build this thing with all those member states and us together, but it's going to be a regulatory sandbox that is going to be open for blockchain projects to come in and live test or build together with regulators and supervisors, which of course is a two-way dialogue. The regulators and supervisors are learning as well what's on the market, and the innovator has the possibility to ask, can I do this? Does this look like something that's possible under this definition, and get some guidance. Also, then there's the legislative initiatives. I think we're going to mention markets and crypto assets and pilot. Also upcoming EU EID, a new regulation, which will include a self-sovereign identity aspect. And also the upcoming Data Act should include smart contracts. And there we're trying to ensure that there's not fragmentation across borders. So you could say innovation, infrastructure, and legislation. This is basically what we do. And then there's also standardization and skills, and we have some initiatives in those areas which are very important. And then co-chair of the FinTech Task Force, which is all across the whole European Commission, and one co-chair is from the financial markets side. This will come up when we talk about MiCA because they lead on the financial markets, and then the other one is from the digital single market side, so that's me.
Well, you cover quite an amount of ground, and we're going to get into some of the specifics in a moment. One of the things you mentioned is standardization and the development of technical standards. We think that's very important. The BSV ecosystem is one of the few I've seen in the blockchain space where our association, on behalf of the BSV companies around the world, have formed a technical standards committee to begin the process of looking at technical standards that are not requirements, but designed to provide leading recommendations to encourage interoperability. How do you see the role of the European Commission in promulgating or leading the development of standards that can help blockchain growth, at least in your single market?
Yeah, this is a very important question. And actually, this is one of the things that we definitely work on. In fact, my unit is the one that represents the European Commission in the International Standardization Organization Technical Committee 307. And then we also work with the European Standardization Organizations, ETSI and Sensenelec, on blockchain standards. We're also active in ITU, International Telecommunications Union, on blockchain and other standards relevant to fintech and other digital areas. So, I mean, standards have a component which is government driven. For instance, a standard can be in a regulation or it might be required for procurement, but it's mostly industry driven. And it should be driven by the industry players based on their needs of interoperability, keeping barriers of entry low, increasing the full size of the market. Of course, there is always a little bit of a tension there because a proprietary system can hold, its clients in and give perhaps more control and can be a way of pushing away the competition. So the industry doesn't always have perhaps the exact same point of view or the exact same incentives, which is why there is perhaps a use for the governmental sector to be involved. And as I said, in fact, we're working on a standardization strategy right now, which is about to be announced in our industrial policy strategy. So basically, industry-led, really meeting the needs of industry, not impinging on innovation, allowing things to develop even further. But where you do need to have a bit of a demand from the government, we want to see more interoperability. We don't want to see many separate blockchains that are all completely walled gardens. We want people to be able to choose and move if they're a part of the token economy or Web3 or some of these other buzzwords that ideally you can move as a consumer, as a citizen, from one offer to another if you're not happy in the place where you were.
Right, it would create more of a world more similar to the internet, where we operate on a global interoperable internet, as opposed to every company having their different intranet or extranet.
And that's the model. I mean, one of the things I said, I'm a lawyer by background, but I've studied in several academic contexts, innovation policy, including the beginning of the internet. And there's a lot of lessons that can be learned from what was a very successful, actually government-led exercise. It was DARPA in the United States, the defense agency that started off this project with a number of universities. But really the openness of it and the openness of collaborating first among universities in the US, but very rapidly also with universities in Europe and then going globally. I mean, we very much like our endeavors in blockchain, both where we're investing for the public sector, but where we're trying to support the ecosystem privately to be part of a global and open ecosystem.
Yeah, I'm glad you mentioned that, because I often use the internet analogy quite often myself, because I started my legal career coming out of law school right in the mid-1990s, right when the internet boom was really hitting. And a lot of the lessons I use today in my thought process of how to lead a blockchain ecosystem are heavily influenced by how I saw the internet develop in the 1990s. Same thing with law and policy, as we'll talk about today. We believe in the BSV world in a much more compliance, law-friendly ecosystem than I think some of the early Bitcoin and cryptocurrency enthusiasts believe in. And the reason I do that is not just because I'm a former lawyer, it's because we want to see a world of massive global adoption by billions of people and by all the world's major enterprises and even governments of blockchain use. And I know that that requires developing a world where governments and big businesses are comfortable with the use of blockchain and digital assets. So I want to talk a bit about how the European Commission is taking an approach to this. And let's talk about MiCA now, which, for people who don't know, it's part of the digital finance package released by the European Commission. It's a proposal for regulation on markets in crypto assets. That's where the MiCA stands from, the acronym. So why don't you tell us what you think, if you can, about the scope of MiCA and its approach to offering a common way for the EU member states to regulate crypto assets?
Oh, very, very gladly. I mean, it's a part of the digital finance strategy, which aims at tackling fragmentation in the digital single market, which I mentioned, and supporting an EU regulatory framework facilitating digital innovation. And we also are aiming to address both the new challenges and the risks. And the idea of MiCA, it's based very much on an approach that was wait and see. We engaged fairly early as the European Commission in a supportive and an active observing role of blockchain as well as other decentralized technologies. But we didn't legislate right away. Sometimes there's a not very nice saying that goes, well, if it moves, the European Union regulates it. In this case, as I said, and it wasn't just me, but a number of us were aware, at least about 2013, and perhaps really observing in depth this part of the financial ecosystem and blockchain as early as 2013. And the regulation, MiCA, came only last year in 2020. But we were getting again and again talking to the legitimate part, which is, to my mind, and I think this shows up in statistics, the massive part of the crypto assets community, is that they were asking for regulation. They said, we don't like to be in a gray space. We don't want to be even more in a black space. We don't want to be associated with the dark web or ransomware. We want to be legitimate. We want to be able to get bank accounts. We want to be able to raise funding. We want to have an IPO, like we just saw with Coinbase. So I mean, this was the goal of many different entrepreneurs. I mean, obviously, no one wanted over-regulation, which is not certainly what we wanted as well. But there was not at all a call, leave the space completely open, and we don't want regulation to come in. The MiCA was the answer. It doesn't leave any crypto assets in the gray area, ones that really are securities, and then you get this difference between the EU analysis and the US approach with the Howey test, which seems to put quite a few or a large percentage of the crypto assets or digital assets, however you call them, into the area of securities. For us, it was between 30 or 40%. It's the member states that are implementing legislation like MiFID, but this was the assessment, which you can look back at ESMA and EBA, we have some reports that were assessing this, so much less. So those crypto assets that are securities stay under MiFID, they're regulated under MiFID. The digital finance package is also looking that perhaps there needs to be some adjustments made for the specific digital securities. This is something that will be looked at. This is, again, my financial markets colleagues. But then when we're talking about payment tokens, utility tokens, stable coins, these are now all covered in MiCA. And it's a risk-based framework. So the lower the risk, the lower the level of regulation. I mean, obviously things, it's also in other legislation, fraud, money laundering are not acceptable in the European Union, but a low risk offer, for instance, of utility tokens, you don't even need a white paper. And if it goes over €1 million, then you need to submit a white paper, but you don't need to get a formal approval. You just need not to have it refused in order to be able to passport in the EU. And then the levels of risk go up to with payment tokens, where a lot of people's money could conceivably be in transferred between various places, and if the system held up. And then finally, with the highest level of regulation for a globally significant asset reference token, a stable coin that has a global financial stability implication. There's probably maybe only one that's proposed right now that comes into that category, but I think you would expect that there will be more. So it's definitely not a category that was made for one initiative, but there's an initiative that we all know that will definitely be allowed in Europe under this regulation, but which does raise questions due to its possible size, which is not at all the same as if somebody's trying to set up a utility token to run smart contracts on their part of a decentralized system and wants to distribute this in order to coordinate some kind of activity.
I assume you're talking about what's now called Diem.
I do want to underline that no one thought, okay, this is where we want to stop it or something, and it's definitely not stopped. I mean, it's something that is allowed. If it comes into that category, it's not me who decides what comes into that category. These are the financial supervisors. But I mean, that is the kind of big initiative that could be so large that, especially for a smaller country could perhaps loom very highly on the horizon if it had some kind of either the country had a financial shock or there would be an issue with that initiative.
So then let's differentiate that which is in the highest category of regulation under MiCA to the category you started by talking about, which is not covered under MiCA, which are, as you described, a larger portion of digital assets that you would consider not covered than, for example, the United States might consider covered as a security under the Howey test. Would that be coins, for example, on things like proof of work blockchain networks, such as the Bitcoin family of coins? Just for our audience, I'm trying to give some examples of how to differentiate these different categories.
This I have to be a little bit cautious on. Sometimes I have to be more bureaucratic, because the way that our mechanism works, the European Commission where I work, we have the sole responsibility for proposing legislation. So for instance, MiCA, we and a group of people, I'm just a contributor, wrote it. And then the Parliament and the European Parliament and the Council, where the member states adopt it. And then the legislation, with some small exceptions, things like competition and fisheries that are actually enforced in ways by the European Commission. This is enforced and regulated by the supervisors of member states. So it will be the supervisors of member states, either in a country or together in the European Banking Authority or the European Securities Markets Authority, that will come to those decisions on these different things. A lot of things that, if it looks like it's being used to pay for things, you can imagine it'll come into a payment token. If it looks like it is being used to really raise money, like equity, and it's being advertised that way, this could come in under MiFID. And then something, if it really is to run smart contracts, or this is a way we're going to share data in order to further research, or I don't know, we also support advertising, but with the citizen, the consumer controlling it, him or herself, then this could come very much into the utility token. But I can't, myself say that is definitely there, because it'll be someone else who will be making this designation.
How much do you think the difference between public chains versus permissioned ledgers will make a difference in the ultimate analysis of how to categorize a particular token or digital asset?
I would say in a MiCA context, not so much. This is a little bit, I think maybe you're referring to the SEC analysis, which was coming to the conclusion that Ethereum, after the initial point, then it became utility and no longer security. And part of the analysis was based on whether it was distributed or the degree to which it's distributed. Maybe not reading this completely correctly. US law these days better than I do. But no, it's probably not so much. It's probably not so relevant. This is an issue that is coming up a bit in areas like network security and data protection, where distributed systems, and this is one of the reasons I like regulatory sandboxes in a lot of contexts, because it gives a possibility for innovators or for groups that are perhaps, for instance, developing a decentralized project, can have a dialogue on the way that responsibility, or let's say reaction to an issue, a technical issue, another issue, can be dealt with if you have citizens complaining and so on. So that's something that we have to work through. I think it's something that Europe is very interested in, being home to a lot of innovation in the very decentralized space, not just the permission space. But that's when it gets a little bit more complicated on responsibility vis-a-vis citizens, who is responsible. But it's, in a way, it's not a completely new concept. I mean, you have very widely participated in, for instance, cooperatives in the past, where again, it's not a single person or a single, perhaps even legal entity that may be responsible for something happening or not happening. So I think we have precedents also when we utilize an analysis of the history of law and the history of commercial law.
So tell us about the overall goals you think MiCA best accomplishes. It sounds like there's an attempt to set different regulatory requirements and approaches for different levels of risk to balance the need for encouraging innovation with efforts to protect consumers and investors from problematic activity. Do you think that MiCA, how do you think it does in trying to balance these competing goals?
I mean, that's really the goal. I mean, it aims to have legal certainty to support innovation, consumer protection, market integrity, financial stability, and mitigate risk to monetary policy transmission and monetary sovereignty. And that's basically the globally significant stablecoin. This is not a utility token or usually a payment token that has this effect. But bringing everything in from the gray zone. So again, no legitimate actor is now just a shadow economy or a black economy actor of no fault of his or her own just because they're doing something new. Bringing everything in, giving the passporting possibility, so you don't have to say, okay, it looks like it's great to work in Malta or in France or in Lithuania. I mean, mentioning some of the countries that have had initiatives in the crypto area. But yeah, I'm going to be stuck in that bigger or smaller market. Once you fulfill the requirements, you have the entire single market, over 500 million consumers and citizens there for your business or social innovation project. And so that's the one part of it. And the other part is giving the legal clarity that, I mean, these are the things that you have to fulfill if you want to be in this market. As I say, as there's a lower risk, they're quite light. I mean, it's still a negotiation, so there's things that the parliament or the council might cut down on or add a little bit. And then a rising level of responsibility as the project, if it goes wrong, either for the consumer or, I mean, for things like monetary policy as a whole, could have a more serious effect. So, I mean, we have to make sure that we don't have too big to fail projects that don't have, some kind of legal framework around them. But the prize that you get for this is that you don't have to have 27 different licenses.
That is
are legitimized one, and you're in.
Yeah, and that's an issue in the United States with money transmitter laws, for example, right, which are state by state in the U.S., and it makes launching any type of financial product that might get covered by that law very complicated. So I wish we had something similar to this in the U.S., at least for dealing with competing state laws. What's the timeline for implementation?
Well, it was adopted on the 24th of September last year. It's been in negotiations in the council and the parliament, and here I can actually say I honestly can't predict, and if I knew, I perhaps couldn't say. Fairly soon. I mean, I don't think you're going to have huge problems. There's definitely things that people have politically interest to say, especially about the global stablecoin category. But overall, the reception seems to be positive. I mean, I would expect it to be adopted this year, but even though thankfully it's slowing down with COVID, it has been more difficult. We don't have physical meetings of the parliament going on right now. It's perhaps not as easy for a negotiation to take place over Zoom or WebEx or Teams as it is when you can put people in the same room. But I mean, I would expect it to be adopted in the relatively near future. But this is with the caveat that I'm not the main negotiator. The negotiations led by the financial markets colleagues.
Is there any talk about grandfathering in any particular types of assets when this gets adopted?
I mean, this goes into probably an interpretation by the supervisors in the member states. I mean, I would imagine, unless there are decisions in the past where it would be a question of revoking them, I mean, things that are on the market now would be covered like this, but perhaps, I mean, you would have to submit things that are the requirements in MiCA, I mean, as well, just to continue having the, or probably have more to ensure that you have the passporting principle.
In the data protection space, European approach to policy and law, such as with GDPR, has become the gold standard around the world, sort of leading the requirements that I know companies, when I was a lawyer, used to follow, because they would look to, okay, if we comply with GDPR in Europe, we're probably going to be compliant pretty much anywhere in the world. Do you foresee that as a possibility with MiCA and how the European Commission is going to be dealing with policy and regulation for blockchain and digital assets?
I mean, it's always nice and flattering to be kind of a global standards. I mean, we could hope so. In some ways, I mean, it depends which angle you look at. I mean, in some ways, this is a more detailed regulation that sets out fairly clearly enunciated requirements from several perspectives. But in other ways, the US's approach with the Howey test can be seen as stricter, again, depending on whether you see, you know, the putting in a securities context is stricter and better and more consumer protection than having, how to say, a differentiated approach. Again, I would hope so, and in any case, it's a subject for discussion with our colleagues from the other major economies and other economies, and ideally we can find also some space in contexts like the G7, where we're in discussions on many parts of the digital economy right now under the current presidency of the G7, and others.
That's great. Let's talk quickly about the DLT pilot regime that is also happening in the European Commission. Will you tell us a bit about that? I understand it's a regulatory sandbox for distributed ledger market infrastructure, providing trading and settlement services. So can you tell us a little bit more about what it's doing?
Sandbox Plus, because as I say, I have under my authority a regulatory sandbox in the usual sense, like the Financial Conduct Authority, as I say, reaching back now to 2014, that utilizes proportionality and the regulator, the supervisor, being with the innovator and giving kind of very regular and close advice. What Pilot does, it goes further. It actually can lift regulatory requirements. And specifically, if we're talking about market infrastructures, the central securities depository requirement for the market infrastructures that qualify to be in the sandbox in Pilot, you can remove, or people running this can remove this requirement. So in that way, I think it's very ambitious, and all credit goes to my colleagues in financial markets. I think I've been someone pushing the idea of a regulatory sandbox tool a lot publicly and within the Commission, but they conceived completely of Pilot and actually this plus element, that there actually is the possibility to lift legislation for as long as 5 years, and then in the reassessment, this probably requirement could be, you can at least imagine it goes in the logical direction, could be removed for these types of infrastructures once they've been proved, off into the future.
Fantastic. And how would, if companies in our association or our BSV ecosystem want to get involved in that type of Sandbox Plus program, how would they do that?
Well, now I have to differentiate between the near future and the longer term future. So then I step back to my sandbox, the one that we have with our sandbox. It's certainly not mine alone. With the European Blockchain Partnership and the European Commission, we'll be having a call for proposals under the Digital Europe program within the next calendar year, most likely. We actually have a delay at levels higher than mine in the confirmation of the work program for that. So that companies will be able to apply for quite soon. Pilot still has to be adopted. So this is a function of the date that it's adopted. And once it's adopted, there will be a infrastructure, you could say, put in place for the calls for participation and who will actually run it, because it hasn't been adopted yet. That hasn't happened yet. So this you have to push a year, 2 years, hopefully not more than that in the future, but it's ahead of us. So there's actually honestly not much more I can say on that without being quite speculative on just ideas that we have, or more precisely that my colleagues have, on the way that it can be implemented.
No problem. I want to turn to one of the other topics you mentioned a little bit earlier, which is the European blockchain services infrastructure efforts. Because I'm a big believer, as well as many people in the BSV ecosystem, of the use of massively scaled chains for public sector services. We think blockchain is a really useful tool for delivering more efficient e-government services and services by public agencies in addition to private enterprise. Can you tell us what is happening with this effort, on what kinds of e-government and other types of public services you think might be best implemented on blockchain?
Well, definitely. I mean, this is a very real live project, and I mean, I should be able to call the names of, 100 people or so, but I can't designate every single person who's involved in the different levels of the technical implementation. I mean, this is really a big project now that we've been financing for a couple of years, and we'll have about 60 million euro of financing in the Digital Euro program that I mentioned. We have the European Blockchain Partnership, all the 29 countries leading. They're sending technical people in the European Blockchain Partnership technical group. There's a policy group that's working on the overall policy, including the regulatory sandbox with us. The use cases, which I mentioned briefly, I can talk a little bit more about them. Self-sovereign identity, which is coming up. It should be a complement to your digital EU EID, which is your passport, your identity card, your very official things, which kind of act as sometimes called an anchor. But then you have all kinds of other credentials in your life. I mean, some kind of identification for reserving the tennis courts with a tennis federation card, members of clubs, things to do with your health or with fitness that may or may not be relevant to health insurance, which might be public and private, and you might want to collect these. So this would be kind of a wallet, and that's the idea, to collect credentials and for you to be able to show the credential that you want to the extent that you want. We also see it as an enabler for the Internet of Things, artificial intelligence, blockchain convergence, stack convergence economy, where people and perhaps in the future machines and legal entities will need to be identified. Then there's diplomas, which is a very simple but very useful use case. So I mean, in both our cases, we would want to do some further study, some executive education, or show a future employer, if we were ever to have one, a diploma. It would be on the blockchain. I mean, we have a set of universities already working on it, I mean, who are in national initiatives. And you could simply, with a blockchain application, show in a secured way without, which I in fact recently had to do. I'm not, as far as I know, changing jobs, but I had to show a diploma or two, and I still had to, photograph in PDF and send it off somewhere. So this would be a way really to enable people to study cross-border seamlessly without carrying paper copies or contacting back and please send these people this from my university. And also for continuing education, that you can add this, you've added new skills, you've added new certificates. And then the next one is audit documents, authentication, and this is with the European Court of Auditors. It'll publish audit documents that should be public in a public way where citizens can consult them. And then this can be authentication of other documents, for instance, in spending programs in the future. And then finally, from these, there's regulatory technology, RegTech. And here we have reporting. And colleagues who did the pilot showed between 30 and 60% savings on regulatory reporting, utilizing blockchain, publishing on a node, as opposed to sending large amounts of data across borders.
Wow, that is a great summary of some of the use cases which I follow as well around the world. I think those are really terrific examples of how blockchain technology can provide more transparency and auditability to information, because it's really all blockchain is distributed data, that we can all trust and use more efficiently. With that, I want to turn to kind of the last topic I wanted to talk to you about is as more and more data maybe get put on blockchains or other distributed ledgers, there are questions I know we get in the BSV ecosystem about how to manage privacy of data, particularly for consumer data. And Europe obviously is a leading region in managing consumer privacy with GDPR. Do you think there needs to be at least consideration of whether GDPR and other world privacy laws need to be updated or re-examined in light of management of data on blockchains and distributed ledgers, as opposed to companies having, management of their data in a single place, right, where they can control, as opposed to data stored across distributed networks?
So yes, I mean, definitely this is an important part of our reflection right now. With our approach to the law and what I sometimes call myself, the law and political economy of decentralized digital ecosystems, it's a little bit of a three-prong approach. Applying existing law, which wasn't necessarily developed for these decentralized ecosystems, regulatory sandboxes, and writing new law. MiCA is new law, as is pilot. Regulatory sandboxes is something that I mentioned. And then we're not going to redo the entire civil code, commerce law, et cetera, and probably not data protection law for blockchain and decentralized technologies. So we have to apply them. The sandbox is one way. The other way is basically the applicability, the flexibility of the law. This is part of the discussion we have now. We have a report on GDPR and blockchain that was issued by the European Blockchain Observatory Forum, which I mentioned. I encourage people to take a look at that. It comes to the conclusion that blockchain, really the key is looking at the applications level. Is the application putting certain data in the cloud? I mean, what is actually on the blockchain? How are they foreseeing utilizing, for instance, new technological approaches like zero knowledge proofs? Mm-hmm. Basically, this is doable. Now, I'm also in the position as, the person in charge of the European Commission side of the European Blockchain Services Infrastructure, and until it gets its own life as a legal entity, I mean, it's the European Commission that carries the responsibility for it. So also in our discussion with the protection supervisors, as well as on a policy level. So here's a question, we have the questions of convincing them of how this type of citizen-centered, decentralized approach to managing your own identity, managing your data, managing documents or transactions can actually be value added for privacy. Mm-hmm. You definitely have interpretations of GDPR and data protection supervisors who see this in a very positive light. And I mean, you can find many public statements and different perspectives, reflections that have been published. And you see, I mean, very serious institutions like this week, I can signal, the European Investment Bank issued a bond on blockchain, on a public blockchain. Mm-hmm. And the payment aspect was done with a central bank digital currency solution provided by the Banque de France. So again, very serious players and a lot of confidence. I would be remiss if I didn't say there is skepticism in some parts of the data protection community. There are people who, though I question something that can be a single point of failure, who like this centralized place where data is. As somebody who was describing an earlier era in financial market regulation, put everything into one place, all the transactions in one place, and then regulate the hell out of it. You also get this certain reflex. It's much easier if all the data is there, and then we know who regulates it. We know who to regulate. If suddenly citizens are moving around with their wallets, with their credentials and so on, I mean, this looks like anarchy, this looks like chaos. So, I mean, we do have to bring these different approaches or schools of thought together. And then this is partially legal discussions, it's partially discussions in the data protection community, it's partially where you see something I haven't mentioned. We had a FinTech lab, which came out of the FinTech action plan, which brought regulators together with technology providers to discuss what the technology does and doesn't do, and the sandbox. So it's a process. I hope that the decentralized, citizen-centered applications, perhaps not appropriate for everything, will gain full acceptance, not just acceptance from the most technology enthusiastic parts of the data protection or cybersecurity community. But this is something that we need to go through. It's part of the adoption and adaption of new technologies. And it's also up to all the stakeholders to also say and keep saying to your counterparts, both in the innovation parts of, let's say, government and the public sector, I mean, where I am, and I can say plainly, but also those who are part of the more perhaps solely protective parts, that yes, I mean, we want to be able to utilize these types of tools ourselves. We want to have these types of opportunities. Because I could say, unfortunately, what you get sometimes is a little bit of a mix, a perceived mix in sentiments. We had a stereotype, which I don't think was ever true, of either the US consumer or the European consumer, that citizens don't care anything about their data, want to give it all away, and they don't care who has it. I mean, maybe certain data, shopping data, other things, a lot of people didn't care. More personal things, I think a lot of people have often cared. They have chosen what to share. They put happy photos or funny photos on social media. They haven't put photos that generally that they found embarrassing or some way showed them as how to say, either unprofessional or bad at what they do. So people, I think, have managed their identities. And you see this coming up, I think, even more with younger people. So sometimes I think in some parts of the data protection community, you have the feeling that people need to be protected because otherwise they'll just go off and do God knows what. But actually a lot of, and this is especially in the blockchain community, but not only, people actually want to manage themselves and know very much what they want to do. And when citizens are doing that and it's legal, I think we should only support it.
Well, thank you for that interesting evaluation of the balance that needs to be drawn. And I agree. I think these are complex issues that new technology always triggers into how to apply existing law to the development of something new from a technological point of view. We confronted with the internet and made our way through to today's very, very successful and economically powerful internet world. I have no doubt we'll do the same in the blockchain and digital asset world with people like you leading the way in policy thinking. I want to thank you for taking time to speak with us about what's going on in the European Union with blockchain law and policy. I'm sure there'll be a lot more. Hopefully we'll be able to talk another time, but I want to end with this question. What's the biggest life lessons you've learned from your time in Los Angeles, and especially doing interesting sports in the California world, and how you apply that to your work today?
An appreciation for nature and for learning. I think these are two great things in life. I mean, I didn't have at least my nuclear family at that time, so I say family is another important thing now. But I mean, not of course referring to my parents, but referring to my wife and sons. Now I didn't have yet, but I think the nature of California and the learning of the citadels of learning of UCLA and University of Southern California are something that I still appreciate to this day.
Well, thank you very much, Pēteris. And I want to thank everyone for watching this interview. I'm Jimmy Nguyen, founding president of Bitcoin Association, and this is another episode of Blockchain Policy Matters. Thank you.